Hello everybody, welcome to your market report. My name is Christian Charlo. Today we're Wednesday, January 29, 2014. Today folks, the Fed decided to taper its bond buying program, and what did market do? Markets pursued their decline. So today what I'm going to do, I'm going to make a follow-up on the last week market report when we talk about a wrap-up of the market. We talked about the gold sector, we talked about the correction that could continue on the market and how to play it with volatility ETF like TVIX. So today on most of those ETFs like TVIX and also on the gold stocks, I think it's a moment to actually take some profits on some of them. So let's take a look at the situation here. So the SPY is actually continuing its decline. Now the target is around 175 on the SPY. So we still have some room to go on the downside. So I still believe that right now to short right now the market, I'm not sure we have much potential here because at this point, that's where we might have a technical rebound on the market. So that's why I think that it's better to track this movement with volatility index. So TVIX on since January 23rd, this ETF took more than 5%. So I think that today, those of you who got in TVIX on January 23rd, it's ideal to actually take some profit. So cash in on your volatility ETF like TVIX. We also had, we talked about the gold sector. I told you that it was a sector that was active on January 23rd, that continues to be, and I showed you an ETF like HGU. I think that today it's a moment to take some profit if you got in on January 23rd, or hold on to it as long as the ETF is staying within its upward corridor. It's the same thing also for NUGT, which is an ETF that tracks the mining stocks, the gold stocks, I mean. And in terms of the stocks, that was the best, it was Gold Corp. So Gold Corp, when we talked about it on January 23rd, I remember I told you that the stop loss on Gold Corp should be on the low of January 22nd and 21st. So far, that stop loss has not been tested. It's still a moment to either hold on to your positions on Gold Corp or take some profit on a portion of it. Personally, I would, if I had that positions, I would actually take some profit if I got in on January 23rd. Now, in terms of the new breakout on that sector, because the gold stocks maintained their gain today after the FOMC announcement, there's IAMGOLD. I like IAMGOLD though because the thing is, a lot of stocks are actually breaking out like Dator Gold, but a lot of them are taking more than 5%. So Dator Gold, I think it's still a good breakout. Stabilized for a while, clearly breaking out, maintaining its momentum, but it's taking 13% almost. So that's why on a stock like that, first of all, I put a trailing stop loss of 7%. So a portion of my position will be reduced if the stock loses 7%. And my stop loss should be at $6 on Dator Gold. IAMGOLD, what I like is that it's only taking 3.21%, and your stop loss is not that far away, is around 395 on IAMGOLD. So that's why I prefer a stock like IAMGOLD, because the loss potential is less as compared to Dator Gold. Now, I also want to mention to you that natural gas has been on fire today, so it has been a movement in gold stocks and also a movement in natural gas. But I believe that right now, natural gas with this spike, it's not a moment to actually get in Bullish ETF. On marketgurus.tv that you can have access for free for 10 days just by clicking at the link below. We did recommend at opening to open some positions on those ETF like HNU and UGAZ, and today, it's a moment to cash in on those positions. Do not be a buyer on natural gas though, because I believe that with this increase, we might see a wave of sellers of profit taking coming on natural gas. So take some profits. So this is it, folks. See you next week for your market report. Today, we believe that it's a moment to actually take some profits on your TVIX, on some of your gold stocks, and also on your bullish ETF on natural gas. See you next week.